Okay, welcome. Wow. Never know what happens when we get everybody live. We've got my dogs excited too. But Dave, welcome to our show today.
Glad to be here. I'm so excited that the dogs know that it's time to go live. They've been quiet for 15 minutes and now it's time to go live and they are ready to go.
As soon as I say hello or welcome, they think something's happening and they need to be part of it. So, but I'm glad you're here. You're ready to go. We're talking all about the exciting parts of retirement once again.
Yes, we are. It's amazing how fast these weeks go. We talk about it. You've had a whirlwind of a week going from here back to Georgia to Utah, back to Georgia. When have you had time to sleep?
On the plane. So
Oh, that's always such a comfortable sleep too, when you're trying to squeeze into those little seats.
I always seem to forget my neck pillow. So every time we travel, I get a new neck pillow. My wife's like, hey, we've got plenty of these now. Let's not do any more for a while.
You don't use the guy sitting next to you. You just snuggle up tight there.
Yeah. I try to avoid that, but who knows? One day I may get somebody to snuggle up to. Well, Dave, thanks for being here. And for everyone else, thank you for joining us live. We're so glad that you're with us today. Always, we are talking about retirement. The one thing we want to focus on today is we're going to talk a little bit about long-term care. It's not something we always get to throw into the mix, but as always, if you have questions that may come up about Medicare, Social Security, there's so many different topics out there, reverse mortgage. And again, like I said, today is long-term care. We'll break into this topic, and then maybe if we have time, we'll break into a few other topics. But we're glad that you're here, glad that you're part of the presentation with us. Dave, I want to ask you about long-term care and why it's so important as we talk about retirement.
Because it's something that's not covered very easily. We don't have government programs that cover this. Now, Medicaid will after you've spent down all your assets, but it's going to require a spend down. So we've got an issue here where many retirees go into retirement and one, not worrying about it. Think, heaven forbid, how could I end up in a long-term care facility, not realizing if they live to life expectancy, there's a 70% chance they're going to become permanently disabled. They're going to end up in that facility or at home where someone's taking care of them. So we've got that issue, one, that it's not going to happen. And two, they think somehow Medicare is going to pay for it or their insurance or somebody else. That's just going to be covered. I don't need to worry about it. Then they wake up one morning and realize long-term care facilities are expensive and you're on the hook for it. And you've got to figure out how to pay for it. So it is important that we talk about the topic, talk about some solutions, but also give people a better understanding of what they may be looking at if they end up having a long-term care event.
So Dave, I may not have, car insurance. What's the percentage I'm going to use that versus long-term care?
Yeah, it's about 18%. So if you look at about 18%, you're going to total your car, but yet you carry that insurance. We talk about fire insurance, 3% chance you're going to have a fire burn down your house. But I don't know a soul out there that doesn't insure their home if it's of any value. Now, if you got an old shed back in the woods here in Tennessee, yeah, you know what? Maybe we'll just rebuild that sucker. But if you got a decent home, you're going to have insurance on there. But yet we go into retirement and so few retirees have any way to solve this issue. Pretty scary when we look at the statistics.
So Dave, when we talk about long-term care, why is this not a hot topic? Again, as you talk about it, it sounds like it's something we really need to focus on. But as we talk about retirement, I get a lot of people that are yawning by saying, this just isn't for me. And they don't pay attention.
Because it's a lot like getting in shape. It's hard. There's not a great solution. It's not, hey, we take a pill and all of a sudden I've dropped 20 pounds, or I show up to the gym and I sit there and watch everybody on the treadmills and everything else. I made it this week. I am there. Same thing with long-term care. There's really no great solution. It's going to cost money. It's going to take time. We're going to have to really analyze what's going to be the best option for us. Well, when we get to anything that takes that much time and effort, unfortunately, we as Americans aren't really great at taking care of those things.
Exactly. Well, again, if you're joining us live, please go ahead and submit your retirement question. No matter the topic, we'll go ahead and squeeze it in between all of our long-term care questions today. And also, thank you for being here with us, as it's always fun to talk to Dave and get his response. And with that, Dave, I want to pull up Keen and pull up their question. Is there a way to pay a family member as a in-home aid without treating as wages or contact labor?
There would be an option if you were to look at this, and the concern is if you have in-house help, you're supposed to report Social Security and Medicare taxes on these individuals. They're employees of yours. Now, they have the freedom as a family member. They obviously can donate their time, which is not what's being asked here. One of the other options would be to look at some gifting. Is there an opportunity to gift some funds to them to help take care of their financial needs? Now it's basically saying, look, you're going to volunteer your time to come help us, willing to give some money over, but you're going to have to look at individual facts and circumstances, how you handle that. May want to talk to your local CPA, figure out exactly what you would do there.
Dave, is Keen looking at this because maybe they're headed toward retirement and realize they didn't have anything saved and now they're looking at this? Or is this just another avenue as we look into long-term care?
I think what they're trying to do is what many people are trying to do is they realize that the facilities are way too expensive, but yet not real exciting. I mean, if I'm a family member, especially if I've got to give up a career, I've seen clients who have done that, or maybe even it's a stay-at-home spouse that's saying, look, I'm giving up all my free time. I'm not going to have time with my kids. I don't have time to go to the gym, go shopping, go golfing, whatever the case may be. Doesn't get super exciting for those individuals to just go volunteer their time day in and day out, doing things most of us hope we never have to do in our lifetimes. So as you look at it, I think it's a question of saying, look, it's so expensive, but yet I've got family members that really are needing some compensation to live and maybe wanting some compensation. How do I get them paid for the services they're providing? So maybe too, I'm just not taking advantage of them, that I'm not putting them in a position saying, because I didn't save enough money or I didn't do things to get myself in a home, now you're stuck. You're the family. You're the one's going to figure this out for me.
And Dave, what if they have to get into a state-funded facility versus a private care? What's the difference between that?
Biggest difference is the quality, and I talk about it here on the question and answer. We talk about in podcasts, webinars, various things. Can't remember where I'm at. We do so many different things here, but when we look at it, the biggest difference between the two, just take a step inside and take a smell. That's going to tell you, unfortunately, state-run facilities, because they don't have the funding, they're generally not as well kept up. You've got situations where they don't often have the staff. They don't have the things being done to keep the facility nice as it should be. Usually those private facilities are going to be much nicer, going to smell much better, but you're going to pay a price for it. And that's going to come out of your pocket because government's not going to pay to put you in the Taj Mahal. I saw something the other day, CR. This is how bad it is. You look at some of these retirees and, somebody was looking at their financial situation, said, look, my best option would be go break into a bank right now and get put in jail. At least I'd have a warm place to stay. I'd have 3 meals a day. Pretty sad when we look at some of what's going on with our retirees. The jail might be a better option than really what they're facing from their own situation because of their lack of savings and lack of preparation.
Exactly. Well, Dave, let's talk into Medicare here a little bit. Lynn's asking, does Medicare Plan B pay room and board for hospice?
When you look at hospice, generally, as long as you are expected to pass away within a 6-month period of time or even up to a year, doctors say that Medicaid's going to step in and cover those depending on the details of it. Part A may be covering part of those benefits. Part B may be covering part of those benefits. But yes, they will provide some coverage. If you are concerned, my recommendation is to get with a broker who can go through the details with you and look at your plan, look at what Medicare itself will cover. If you've got a supplemental plan or Medicare Advantage plan, go through those details with your providers. That's where you're going to get the information you need, because unfortunately, when we look at even things like hospice, there may be things that are covered that aren't, things where you may have a co-insurance or a co-payment. All of that's going to vary based upon your situation.
Dave, are we depending upon Medicare and not having the full information, meaning that are we really putting forth the right knowledge or training we have? Because I feel like Medicare is pretty complex if we don't do this right.
Yeah, the problem is most people don't spend enough time thinking about it. It's kind of like when you register for the draft, you just think, oh, I got to do it. Age 18, I got to submit the paperwork and I've got to register for the draft. The government tells me that's what I got to do. Unfortunately, many people take Medicare with that same lack of thought. hey, I'm 65. That means I get signed up. I get free Part A. And many people wake up and go, oh, I got to pay for Part B. I thought that was free too. And oh, wait, there's drug coverage I got to pay for if I want it. All of these things. And so it is something that we've got to really take time to look at. Unfortunately, most people will never spend the time they should to fully understand the program.
And Dave, do we have to sign up for Medicare?
No, you don't. You never have to. And some people never will. They may have insurance from either a government agency or may continue to work up until they pass away where they've got a good employer plan. But these are things that you need to understand and look into. And my recommendation for anyone when it comes to Medicare, get with a good broker. There's a couple out there that we work with that could help you figure out what the best answer is for you. And it's going to be different too for different people, when we look at it from a long-term perspective.
Dave, we've talked about this next question, and I still want to bring it up because you and I have had several discussions on it, but this one's from Sheila. Is it true that when in a private nursing home, if you pay at least 3 to 5 years and run out of money, they will let you stay until you pass away for the cost of your monthly income?
That is not true. I would love to see where this came from because I can't imagine anybody doing that. It's like having a home mortgage and all of a sudden 3 to 5 years in, you're like, I can't keep up. Hey, you're going to have to step in and just take whatever I got. Let me give you whatever you need. This isn't the government. Now again, if you look at it, if you run out of money, yes, Medicaid is going to step in and they're going to end up covering the cost, but it doesn't tied to 3 years. It's not tied to 5 years, tied to whatever asset you have available. But these private agencies are not the government. They're not going to just do this stuff for free. They've got to make money, and they make money by charging you fees to be able to stay there. And if you're in a bad situation, I had this happen. I think we may have talked about this on either a podcast that we did, another one of these question and answers. But I had a situation here recently. We helped move a lady out of a very, very nice facility in our neighborhood here, and she wasn't going into that same nice facility further into Memphis. And I don't know all the details, but the assumption is she no longer had the money to pay for the really nice facility she was in. And so she was settling for that second tier retirement because she had run out of cash and had to go into the Medicaid facility.
And Dave, I feel with this, a lot of times we're just uneducated, and that really is what this comes down to. And I laugh at this question, and we've talked about it because people will see this on a blog post or they'll see it posted somewhere and they just say, hey, I know I can at least cover 3 to 5 years. But their lack of education really shows through.
And our general guidelines of human decency say, hey, people just take care of us, but that's not the way the world works. We don't have endless pockets for these companies or other people. So as you look at it and think, oh, there's no way I could kick an elderly person out on the streets. Well, they're going to kick an elderly person out on the streets. That's what they have to do to be able to make their facilities work and to be able to continue to provide the benefits for those who do have the resources to stay there. So these are things we've got to look at. We talk about it with things like reverse mortgage. We're not going to go too far down that path here today, but if you look at a reverse mortgage, can be a great way to help supplement income during retirement, but you end up in a home, you're now in violation of those loan agreements that you have with your reverse mortgage if you were living there by yourself. And now it's no longer your primary residence because you're in a nursing home. You can be in a really bad position, but that company still got to have that loan paid. So these are things we've got to look at too, as we're structuring our retirement plans and taking care of things. And we can't rely on the goodness of other people to take care of us. Now, hopefully there are some good people in our lives that will do good things for us, but we've got to do it for ourselves. We can't just expect them to pick up and do things we weren't willing to do for ourselves. We weren't willing to prepare for ourselves.
Mm-hmm. I like that. Well, Dave, let's pull up John's question now. John is asking, will Medicare pay for long-term care if you require skilled services?
There are some of the skilled services that they are going to provide and cover, but realize when we look at long-term care, most of it is unskilled services. Yeah, you may have a doctor come in and see you, and yeah, they're gonna cover that. You may have prescription drugs that you're going to be administered to you. Those things are going to be covered, but to feed you, bathe you, help you use the restroom, get you up and mobile, moving around, provide a place for you to live, that's not skilled services. Those are unskilled services that unless you have Medicaid stepping in, you're going to have to figure out how to pay for.
So Dave, what are skilled services as we're talking about this?
The best way to look at it is if it has to be done by a licensed person. So if you've got a licensed nurse, you've got a licensed doctor, you've got some other type of licensed therapist, whatever the case may be, those services generally are covered under Medicare. But when we look at, again, if you've got to have someone feed you in the morning, yeah, I can do that. Yeah, I'm a licensed CPA, but that's not going to help anything. But I'm not a licensed physician or medical service provider. But hey, if you need to be fed, I can do that. And it's those services that are what needs to happen for most people, because again, most people are in a position where they're not hooked up to an IV. They don't have all these medical issues. It's just, I can't keep up with myself.
Dave, it seems like we put a lot of emphasis on making sure that we're set for retirement. But then again, on this part, we're really lacking on that long-term care because we feel like it's never going to happen to me. But you're saying there's a huge percentage that's going to happen to, and we're just not ready.
And part of it is CR, and I would give this, but it's expensive. It's not cheap. I mean, that's one of the other problems. And that cost continues to increase on an annual basis because insurance companies realize that it's getting more and more expensive to take care of people inside of these facilities. So, we've got to look at that too and realize that some people want to solve it, but they just don't know financially, how do I do it? Now, I will tell you, you should look at options, look at long-term care insurance, look at a life insurance plan, or if you're going to have family get involved, I'll talk about this too. Please let them know. Don't just sit there and wait until you have the issue and then surprise. Hey, CR, guess what? Best friend, I got issues. You're moving to Tennessee and you're going to take care of me for the next 5 years. That's not the way you do it. You need to let your family know if this thing happens, what that might look like so you can have discussions. I talk about it all the time. Biggest problems in life are caused from unmet expectations. Family expects, understands what's going to happen. Much easier to deal with, and all of a sudden they think, "Hey, I'm going to have a good life," and next thing they know, they're changing diapers. I mean, that's not something any of us want to get into if we're not prepared for it.
Yeah, I'll definitely hang out with you, Dave, but I'm not changing any diapers.
Okay. Well, I won't expect you to. Hopefully, I've got a good plan set up. I've told my family I'm going into the facility. Come visit me there, but I'm going in so I can hang out with all the others that are in my same condition.
Well, Dave, Juliana's wondering, is the 100-day limit per incident?
Yes. So what the issue is and what they're talking about is Medicare is going to cover a 20-day period if you end up in a long-term care facility, 100%. And then the next 80 days, you've got a co-insurance. You're going to have to pay $185.50. That is per incident, meaning if you get out for a 6-month or a 60-day, not 6-month, 60-day period of time and go back in, they will cover you again. But realize most people don't go in and out of these. This isn't like the amusement park where you're going to go in and out over the weekend and try Disney Magical Kingdom today, and we're going to try the animal park tomorrow. You're going in there. Most of you are going to stay. It's a one-way ticket. And the next time you go out of there, it's unfortunately going to be usually laying down.
Well, Dave, when we talk about this 100-day limit, I know we're looking at, there's very specific terms that come along with this. But it seems like if we go to the hospital, for example, and say we have an issue, is that going to help us to get back into a long-term care facility? Or can we just jump right to the long-term care? Because it seems like there's a lot of complex issues.
There really are. And you do have to be admitted to a hospital for 3 days prior to this. So that is something else you've got to look at, that if you end up getting out and then you think, hey, I'll just go back into the facility without having gone back into the hospital or gone through the channels. Now, I will tell you, these companies understand how Medicare works and they want to get paid. And they realize Medicare historically has been a pretty good payer. They're not going to short them on what they've agreed to pay. Whereas you as an individual, that may be questionable on your ability to pay them. So they are going to do their best to make sure that you qualify under the insurance rules that you're under. But again, you can't 100% guarantee that they're going to do the right thing. That's why you need to understand the rules and make sure someone else does. Because again, when we're talking about long-term care, maybe a chance you don't even know you're going into that facility. I mean, when you look at it and where we get to, unfortunately, you may need someone else to help you make those decisions once you get to that point.
And I think that's very wise, because as we look at this, there are conditions we have to follow. And that's something you're saying, is that a lot of us are just jumping up to a conclusion to say, yes, this is what we're supposed to do. But in all reality, this is what we need to do. And there's a huge difference in making sure that we're going to be able to save ourselves a lot of headache and a lot of money if we're facing, these wrong decisions, and we just kind of hit it head on.
Yeah, and you've really got to take your retirement like you did any other phase in your life. I assume any of those that went to college, hey, we had to map it out. I know I did. You had to look at your budget. You had to figure out, how am I going to do this? What debt am I willing to get myself into once, as I was going through my family years and still going through those? What are our budgets? How much can we spend? Got to look at that in retirement, lay it out. And I'll tell you, if you'll take the time to do it, if you'll have a good plan, retirement's going to be much better. I read a statement the other day that when we look at those who have plans in retirement, they feel 3 times more comfortable about their retirement than those who don't. That they just are happier, they have less stress. And really, that's where we need to get even with our long-term care is what is our plan? And then let those around us know what that plan is.
I like that. Well, Dave, let me pull up my next question from Elizabeth here. She's asking, what are your thoughts about a 1035 exchange of whole life insurance for a hybrid policy that allows payments for long-term care?
I'm not against 1035 exchanges if done correctly, but it's something that needs to be looked at. Unfortunately, a lot of advisors will just immediately go for that cash, knowing that it can be transferred over. Maybe you've given up on an existing policy. They can put it in a new one, potentially get some commissions off of that. Not against it, but I would want to look at that policy. What did you buy it for? Where does it stand currently? Are you through initial periods where you can let that policy be transferred without consequences to you for back-end charges? What are you looking for from a long-term care side? Do you have other ways to maybe solve this issue? So it can be an option. I think it's a great question and should be explored on your end. If you are in a position where you've got a whole life policy or trying to use a life policy to cover a long-term care event, but let's take a much deeper dive inside of there to see exactly what should happen.
Dave, what do you think the biggest mistake is as we bring into we talk about the 1035 exchanges, especially if we're bringing in the whole life. What issues do you see that come up on this?
Yeah, one of the biggest problems to some level is advisors, and I hate to pick on advisors because we are one. I am licensed to sell various products, but oftentimes we get into a situation where again we see dollars out there that can help us as an advisor, and again talking about the industry at times versus helping the individual. And this is where we've got to be careful and have a purpose behind what you're doing. Make sure you're getting explained what's happening. What are the consequences? Why am I moving out of this policy? Why would I not just keep it? We have situations where we do leave policies in place and it's the right thing to do. We have other situations where, hey, this policy should be moved. Maybe the whole life. Right now, I know I've got a whole life policy that I will keep for the rest of my life. It's not outpacing inflation. It's earning maybe 1.5%, 2%, and yet inflation's 3 or 4. Every year I'm losing some buying power there. Those are things you've got to look at too, because in theory, what we want is assets that'll keep up with inflation or exceed it. So we've got some growth there. We're not just trading the dollars for future dollars.
And again, Dave, we're talking about long-term care. And for those on replay and those joining us live, thank you for being here. Long-term care is not a popular piece. And like you said, it takes a lot of planning. It takes a lot of money and people aren't just ready for this. But Dave, I want to bring up John's questions. We talk about this. He's saying, my mother is 66. Is she too old to get long-term care covered? So now we're looking at the other perspective.
John, she's not too old, but it's going to be very, very expensive. And it's not her age that may disqualify her. It could be existing issues from a physical standpoint. Maybe she's had a family history of mental issues. Maybe you got a family issue of having bad back, bad hip. Maybe she's had those herself. Could be some of those. But if you're getting into your 60s trying to buy these policies, it's going to be very, very expensive for you to do so, but not impossible to purchase. I would say at this point, at that age, I would seriously look into the life insurance coverage. See if you could use a permanent policy with a chronic illness rider to help solve this issue. You'd have to have illustrations run, but definitely would consider both options.
So Dave, you're telling me that John has hope for his mom.
Yeah, he has hope out there, but again, it depends on the amount of money they're willing to put into these. I will tell you, I've run the math multiple times, that if you end up with a long-term care event, you are far better off buying some form of insurance to cover it than you trying to save for yourself, because there is a percentage of the population that never ends up using insurance. So as a result, insurance companies are able to use that money to cover those who do. And that's one of the great things about insurance is they've got these credits out there that you're able to use if you have to use it that other people aren't. So it's a much better option, but that still doesn't take away the fact that it can be very expensive, and maybe a situation where for his mom, she ends up paying for 20 years, dies peacefully in her sleep with a traditional long-term care policy, having never used it. and all that money's gone. All of that gets lost. So things you've got to take into consideration. What are your worries? What are your concerns? What risks do you want to remove? Hopefully we can take out as many of the risks as possible. Unfortunately, sometimes we just got to be willing to accept it. It's just like we look at it now with COVID and everything that's going on. We all have to accept at some point some level of risk with this. We don't have the freedom to just sit in our homes, not socialize, not do anything, and not go to work or do the things that we need to do. We all have to accept some level of risk, and it's going to be different for all of us. Same thing as we get into retirement. Which risks are you willing to eliminate? Which risks are you willing to pay to eliminate? Which one you're saying, look, if everything goes bad, I guess I'm stuck. I'm just in a Medicaid facility. That's what's going to be.
And Dave, you said it's not so much age. So as we're looking at this, somebody comes and says, what is too old for long-term care, which I'm assuming when you're at the door, that's probably too old, but you're really just saying it comes down to planning and really getting this prepared.
Yeah, it really does. And the sooner you can plan for these things, the better. We end up with health issues the older we get, and they can prevent us from getting insurance coverage. Here we're talking about morbidity, not mortality. When we're looking at life insurance side of it, we're talking about mortality. Here we're talking about morbidity. Yeah, if you've got bad back, bad neck, bad knees, whatever the case may be, long-term care companies are going to say, no, they don't want to take that risk. And this is problem with almost every insurance out there, excluding, I guess, our marketplace health insurance. Pre-existing conditions, when we get into even Medicare, if you miss Medigap periods, we look at long-term care policies, these pre-existing conditions can cause a lot of issues for us being able to get the insurance we want, and especially the price we can afford.
Well, Dave, I want to pull up, it looks like we have a few minutes left, so I want to pull up my next question here from Kapil. Are there tax benefits when paying long-term care premiums?
The premiums themselves, no. As far as going into the policy, my understanding is no. I guess you may be able to get some type of deduction off of there on your tax return. Never really thought about it. So sorry, I may have to pass on that question, CR. If there are any benefits, it would go as a deduction on Schedule A as a medical deduction, which is going to be limited to your income and your Schedule A typical standard deduction amounts that you would have, but not sure what that answer is.
That's okay. We'll jump to our next one then from Sharon. Does it make sense to do a one-time payment?
It can. We do see people do this once in a while, and I'm not against it, where you put a lump sum in there. We had someone not too long ago put $100,000 in, covered all the costs of that for himself, put another 70 or 80,000 for his wife to be able to cover her costs. So not against it at all. I would definitely recommend it over a lifetime pay. That's the one I don't encourage any of you to do. Companies, in order to try to make it affordable for you, are going to recommend that you pay for the rest of your life. Most of those policies will lapse at some point. The longer you have to carry out an insurance policy, higher probability you're going to lapse that at some point in the future.
And Dave, so if we're looking at this saying we want to do a one-time payment, I'm assuming we have to have a lot of money set aside in order to do this versus, waiting for a period of time to take care of this.
Yeah, it's tens of thousands of dollars. We're not talking, hey, we're going to put $5,000 or $10,000 into one of these things. It's tens of thousands, because when you look at it from a long-term care standpoint, your premiums every year, standard premiums, are going to be anywhere from probably $2,500 to $6,000, $7,000, depending on what benefits you're trying to get. That's per year. So when you look at it and you're saying, hey, typically we're wanting 10, 20 years at least to pay in, from an insurance standpoint, you're going to have a big payment to go into there. And some people want to do that. They're fine with saying, look, I'll put it in. Some of those policies do now have a death benefit, meaning that if you end up passing away having never used it, your beneficiaries may get the money back you put in plus a small return, generally not anywhere near the investment return you would get if you had it in the market. But there are provisions out there for you to be able to get some of that money back for your beneficiaries if you pass away.
Well, Dave, we have time for one more question. I'm going to pull up here from Kevin, and he's wondering, is long-term care insurance available after receiving Parkinson's diagnosis?
No, I do not know of any company. You're welcome to go out and try to shop that and see. But again, when you get these diagnoses, because they have no pre-existing condition provisions that require them to get you signed up, they're going to run from anything they possibly see that may result in you being in a facility, and especially being there for a long period of time. Obviously, the longer someone's in the facility, that the more expensive it is, unless the policy's limited, which many are. But no, these are things that are going to prevent you, and why we say get started early. Try to buy these. I would recommend people in their 30s, 40s for sure, if they're going to go this route. And even if you're going to go with the life insurance route, you buy the policies early, be able to allow some growth to happen inside of there to help cover those costs and get a set period of time. So you're not paying until you're 85 when you're using it, still making payments up until that period of time.
Dave, what if I look at this and say, hey, I don't have Parkinson's in my family. We don't have any other issues. Why start early? Why can't I wait? And what you're saying is, hey, no matter what you have, you really have to take advantage of this now.
The secret to retirement is the time value of money. When we look at it, it's the ability for compounding interest, it's the ability for assets to grow over time. And it's all built upon the amount of time we have. If you can start in your 20s or 30s and start putting a plan in place, get money going into these, you're going to be way better off than someone that waits till 50 or 60. Because at that point, you've lost 20 to 30 years of growth. And when we look at compounding interest, very, very powerful as it relates to our retirement.
Well, Dave, that's all the questions we have. Again, we talked about one of the most unpopular topics in retirement, but again, for us, we know how important it is. And so for those, again, watching on replay, thank you for being part of this, because really it's important that you're here, especially for those live, that you understand why we talk about each of these topics, even though if they're not popular, it's because they're important. And these are things that we are all going to talk about. Dave, you very eloquently say that you are helping people eliminate risk in retirement. And unfortunately, not everything is a popular piece of that.
Absolutely not. I'm hoping next week we can talk about politics, and then this is going to seem like a light show versus getting into the political topics that seem to be going on around us right now.
Yeah, maybe we'll, I don't even dare do that, Dave, but I think we could definitely have this full, but I think right now we'll stay with what we have.
Yeah, let's do that. No worries. We're not getting into politics next week, the following week ever. Now, obviously, there are times with retirement we have to talk about political changes and recommendations. But yes, we are going to stick on to the topics we have, trying to help you eliminate those risks that you're going to face in your retirement.
Yeah, I definitely was hoping we were going to pull up some tax changes with Joe Biden here. So we'll see. But I guess that you're telling me otherwise.
Well, yeah, it's happening right around us. I mean, this is going to be interesting as we look at towards the end of the year. We do a webinar talking about the proposals, whether they will become reality or not, we will see. But if some of them do, it is going to change a lot of our lives, because somebody's got to pay for those. And we've got to figure out in a retirement what effect they're going to have on us.
Yeah, exactly. Well, again, thank you for being here with us today. And Dave, thanks for your time. And we will see you guys all again next Wednesday at 11 a.m. Central Time. And we look forward to our conversation then.
Goodbye.